So, Amazon just dropped their latest earnings report, and honestly, it's a bit of a head scratcher. I mean, they posted absolutely record breaking revenue, but their stock price actually dropped. So, what gives? How can a company have this monster quarter and still make investors nervous?
Okay, it all boils down to this. On one hand, you've got revenue hitting a staggering $213.4 billion. I mean, they just blew past expectations. But then you look at their earnings per share, that's EPS, basically a key measure of how profitable they are, and it came in just a tiny bit short of the target. So a huge beat on sales, a tiny miss on profit. And that disconnect, that's the key to unlocking Amazon's entire strategy right now.
All right, to really get to the bottom of this, here's what we're going to do. We'll start by looking at those two sides of the story, the incredible growth and then the sky-high cost of that dominance. Then, and this is the important part, we're going to connect it all back to Amazon's huge master plan for AI and what this massive $200 billion bet is really all about.
Okay, so let's kick things off with the good news, because honestly, there's a lot of it. The top-line numbers, they paint a picture of a company with just incredible momentum right now.
First up, let's just get a feel for the scale here. Their North American retail business, that's the biggest piece of the pie, making up about 59% of sales. Then you've got their international retail at 24%. And then there's Amazon Web Services, or AWS, at 17%. Now, it might look like the smallest slice, but trust me, as you're about to see, it is an absolute powerhouse. And speaking of powerhouses, AWS is it's re-accelerating in a huge way. We're talking 24% growth year over year. That is its fastest growth in over 3 years. It's now hitting what they call an annualized run rate of $142 billion. And all that means is, if AWS just kept up this pace for a full year, it would be a $142 billion business all by itself. This isn't just growth, you guys. This is a massive signal that demand for cloud computing, especially for AI, is just exploding. And hey, it's not just AWS that's on fire. Amazon's advertising business, it's a giant now, growing at 22%. Their retail business is growing, and I quote, briskly. And this one might be the most impressive. Their own custom-designed computer chips, Graviton and Trainium, now have a $10 billion annual run rate. I mean, that is some serious momentum across the board.
Okay, but now for the other side of the coin, because achieving this kind of record-breaking growth requires an almost unimaginable level of investment. And that, right there, is what puts immense pressure on their profits and cash flow. And here is the number that tells that whole story. $200 billion. Let that sink in. That's what Amazon is planning to spend on capital expenditures in the next year. And we're not just talking about keeping the lights on. This is a massive investment in the future infrastructure for AI, for robotics, and even for their satellite internet project.
And right here, this is the direct result of all that spending. A year ago, Amazon generated over $38 billion in what's called free cash flow. This year, that number has absolutely plummeted by 71% to just over $11 billion. They are, quite literally, spending today's cash to build tomorrow's empire. And it wasn't just the huge investments. On top of all that, the bottom line this quarter also took a hit from $2.4 billion in one-time special charges. Things like settling tax disputes, severance costs, and writing down the value of some of their physical stores. This really helps explain that small but really significant miss on earnings per share.
So you've got this explosive growth on one side, and this huge cost on the other. What's the thread that ties it all together? Well, it's a single unifying strategy to build and to dominate every single layer of the coming artificial intelligence revolution. And believe me, they are attacking this from every single angle. They're building their own custom silicon, right? Like their Trainium chips that offer better performance for AI tasks. Then they have services like Bedrock, which gives over 100,000 companies access to these incredibly powerful AI models. And they're already deploying AI agents like Rufus, the shopping assistant that already drove nearly $12 billion in extra sales, and even newer, more powerful agents for businesses. It's the whole shebang.
And you don't have to take my word for it. CEO Andy Jassy laid it out himself. He explicitly connects that $200 billion investment directly to what he calls seminal opportunities in AI, chips, and other frontier tech. They see a land grab happening right now, and they are spending whatever it takes to win it. So the whole picture starts to become really clear, right? Amazon is making a massive, calculated bet on the future. Let's take a look at what this really means for the road ahead.
So if you look at their guidance for the next quarter, it shows they expect that strong sales growth to keep on rolling with another 11 to 15% jump. But, and this is key, notice the operating income. While it's still really high, it's being held back by $1 billion in new costs just for Project Leo, which is their satellite internet business. So the growth continues, but yeah, so does the spending.
So here's the absolute crucial point. This is the big takeaway. Amazon is making a deliberate trade-off. They're willing to sacrifice short-term profits and cash flow, the very things that Wall Street obsesses over from quarter to quarter, for what they believe will be decades of dominance in the age of AI. They're not playing for next quarter. They are playing the long game. And that brings us right to the final, multi-billion-dollar question. We are literally watching one of the world's largest companies make one of the biggest bets in its history. They are spending today's cash to build tomorrow's AI kingdom. The only question that's left is, will this $200 billion bet actually pay off?